I want to start off. You're on the ground there in Davos. You're with so many CEOs. What are you hearing about their plans for 2025 and bringing workers either back to the office or allowing remote work? I mean, what are those conversations?
I think the general perception is that the economy will continue to go well, maybe even better than we have seen over the last couple of years. And that is obviously boosting overall workforce. And there is a common agreement amongst most CEOs that they want to see their people mostly back in the office. That doesn't take away that there is flexibility and that there is some level of hybrid, but there is a clear expectation that people are mostly in the office, and that will obviously help real estate markets and office occupancy.
Last quarter, you said that your leasing and markets advisory business, that was up 21% year over year. That was a few months ago, obviously. What's the status now? And I do want to ask, I know the announcement just happened earlier this week, but the president talking about turning the U.S. into a manufacturing nation once again. Has that led to an influx of calls about building sites or creating new offices just to try to ramp up manufacturing with the idea that there's going to be a lot more government support for that?
Well, I would say that the Inflation Reduction Act was already doing that to a large degree. We saw a significant interest from European manufacturers, but also from Asian manufacturers to build up manufacturing onshore in the US or nearshore in Mexico. That is continued to be the case. I had several conversations with clients of ours who were interested in that approach and in our services around that. And so I think we will see a good demand from overseas manufacturing to get into the US, and probably also US manufacturing to bring some of their production back into the US.
All right. One other thing you mentioned when you were on our air just a few months ago is the 10-year yield. You said at about 4.5%. It's not really a headwind to deals and other market activity today. It's at 4.62. We've seen a lot of volatility. In general, with the idea that we might see a more hawkish Fed going forward, only one cut priced in this year, what's the sentiment when it comes to business leaders as far as deals, building sites, leasing, et cetera?
Well, I think the most important piece is predictability. So people want to know more or less what the 10-year interest rate will be. And whether it's at the end of the day 4.5 or 4.7, that doesn't really make a difference. What isn't that great is that significant volatility. So if we are clear about the plans and if we understand better what the Fed will do, I think that will help to continue to recover the markets and the transaction volumes, which we have already seen in 2024. And we expect that to happen also in 2025.
Well, obviously, we have a Fed meeting coming up in just a few days. Does the tone of the Fed, does that make a big difference in what you're expecting to see from your clients and other customers?
Well, certainly the tone has an impact. Now, real estate is long-term investing, and so not every comment is moving the needle. But if there's a continuous commentary that there will be much more hawkish going forward, that would bring some hesitation into the real estate investment market for institutional investors.
All right, Christian, we mostly think about JLL when it comes to real estate, but you also, speaking of investments, you offer investment vehicles. One I want to talk to you about is the JLL Income Property Trust. It's a REIT with about $6.5 billion in total assets. What are you seeing when it comes to interest in that? A lot of people have come on our show saying that now's the time to try to get income, whether it's the bond market or dividend-paying stocks. When it comes to this REIT, what kind of interest are you seeing right now with a lot of the volatility in the market?
Well, I think volatility is the key word. We don't only have volatility in the market, we have quite a lot of volatility in the world. And so it makes a lot of sense to have some proportion of your wealth in a very stable income stream. Real estate can deliver that, and especially real estate in the US. The US is obviously showing a very prosperous development on the economic front, and the outlook is also very good. That is correlating with the performance of real estate. And so it's probably not the worst time to think about investing into those type of products.